Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. An indecisive, if higher, doji cross yesterday. It was the third session in a row where we have had indecisive patterns that also gradually moved higher. I suppose I am not surprised by either of those actions, as we are in a fairly free zone between some heavy-duty support below between 108.95 and 106.79, and some heavy-duty resistance overhead between 115.70 and 120 even, with only two lesser Fibonacci levels at 111.06 and 113.04 to make any ripples in the market. Overall, the market continues to move away from what appeared to be two descending triangle patterns formed since March into a current possible rectangle pattern. Previously, I had started to look at potential targets on the upside for those two previously mentioned descending triangles we're seeing in this market, as well as the double stroke triple bottoms over the same period. Given the mood towards the upside that we've seen, I think I will still do that for now. So, for the larger March to April descending triangle, I had a potential primary target X1 in the 132.10 area, with a harder secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I had a potential primary target X3 in the 120.5 area, with a harder to get secondary target X4 in the 129.20 area. Now, for the double stroke triple bottom pattern, I had a potential target X5 in the 126.5 area. Okay, have you got all of those? Well, for all that detailed work I'd done to lay out the potentials on the upside, it could all instead be seen as a possible rectangle pattern still in construction. Now, I'm not sure on all this as yet. I'd like to see how and if prices manage to deal with any attempts on that upside congestion area, but I've already put all the proposed targets topside on probation with a view to possible retirement. If things do not show up soon, then all the X targets will become redundant. Now, so far today, an interesting higher open, but that's all it has been, as it looks very much like a small, indecisive, spinning top doji cross possibly right now. Spot gold. A reactionary bearish double as the market balked at testing the 50% Fibonacci line of the March 2021 to March 2022 move at 1873. A drop down towards the broken upper time currently 1837 of the early March to late April bearish Andrews pitchfork. This big bearish Andrews pitchfork has shown the way lower since its inception in late April. Perhaps more importantly, and I've yet to make my mind up on this, is also down to the flatlining long moving average nearby, currently 1841. I have the beginnings of a suspicion that this market may just be getting ready to start sliding down the outside of the bearish Andrews pitchfork. However, to do that, it has to overcome the long moving average, and that is no mean feat. So far today, well, a fresh attempt lower, but again, balking right now ahead of the combination of the long moving average and the broken upper time. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware there is a disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.